As of the closing bell on Wednesday, November 26th, SMX Security Matters PLC has delivered a market performance that can only be described as a seismic event. The stock closed at exactly $17.40, exploding upward by an astonishing $11.49 in a single trading session. That is a 194.42% gain in one day. But the story did not end when the market closed. In the after-hours session, the buying frenzy intensified, pushing the stock up another $8.40 to trade at roughly $25.80, an additional 48% move. If you are looking at your Fidelity mobile app or tracking this on Robinhood, you are witnessing a combined move of nearly 300% in less than 24 hours. Now, let's talk about the expectation versus the reality, because with a move of this magnitude, the gap between the two is where fortunes are either made or vaporized. The expectation for a small-cap stock like SMX, especially one with a history of reverse splits and heavy dilution, is that a move like this is a classic pump and dump. Investors see a near 200% gain and immediately assume it is driven by a chat room hype cycle, a flurry of hollow press releases, or a short squeeze with no fundamental backing. The expectation is that this is a zombie company, briefly coming back to life before fading back into obscurity. You look at the chart history, you see the massive price destruction over the last year, and your brain screams, "Trap!" But the reality? The reality unfolding right now is far more substantial and terrifyingly disruptive to the global supply chain status quo. The reality is that SMX didn't just issue a press release, they effectively proved on a global stage in Dubai that they have solved the holy grail problem of the commodities market, physical to digital transparency that cannot be destroyed. While the market was expecting another fluff piece, SMX stood at the DMCC Precious Metals Conference and demonstrated that their molecular memory technology can survive the smelting furnace. This is the pivot point. We are no longer talking about a penny stock with a cool idea. We are talking about a company that has potentially become the standard bearer for the entire global gold trade. The tension here is extreme. Is this the greatest turnaround in microcap history, or is the market overreacting to a proof of concept that is still years away from generating the cash flow needed to save the balance sheet? Let's dissect exactly what happened to trigger this explosion. The catalyst was the announcement of 6 strategic partnerships, culminating in the Dubai presentation. This wasn't just about shaking hands. The company revealed that its technology is now being integrated into the supply chains of major players like Goldstrom, Brinks, and True Gold. The market realized that SMX has moved from the science experiment phase to the industrial adoption phase. When you have the Dubai Multi-Commodity Center, the literal hub of the global gold trade, backing your technology as the solution to gold laundering and fraud, you have achieved a level of validation that no amount of paid marketing can buy. This effectively re-rates the company from a speculative maybe to a strategic must-have in the eyes of investors who understand the pressure on global supply chains to prove provenance. To understand why this is driving the stock to $25 in the after-hour session, you have to understand the technology itself. Most tracking systems today are external. Barcodes, QR codes, RFID tags. These can be removed, swapped, or faked. If you melt a gold bar down and recast it, the barcode is gone. The history is erased. This is how conflict gold and sanctioned materials enter the legitimate market. SMX's reality exceeds expectations because they are marking the material at the molecular level. They are embedding a chemical signature into the gold, the rubber, the plastic, or the rare earth mineral itself. Think about the implications of this. They demonstrated that you can take a marked gold bar, melt it down, turn it into jewelry, melt that jewelry down and turn it back into a bar, and the SMX reader can still identify exactly where that gold came from. it survives the fire. This permanence of memory in physical matter is what has the market in a frenzy. If this becomes the regulatory standard, and the EU and US are aggressively moving towards digital product passports, then SMX essentially owns the toll booth for proving that a material is legal and green. That is the multi-billion-dollar thesis that suddenly woke up the algorithms today. However, we must violently pump the brakes and look at the financial reality that contradicts this massive price surge. While the technology is revolutionary, the balance sheet has historically been a disaster zone. We have to address the elephant in the room, the reverse stock splits. SMX has undergone significant reverse splits in 2025, a 7-for-1 split in August, and a massive 28.5-for-1 split earlier in the year. If you were a long-term holder before these splits, your equity has been decimated. The stock price you see today, $17, is optically high because of these consolidations, not because the company has been a compounder of wealth over the last 5 years. This creates a dangerous dynamic for new investors coming in via Robinhood stock trading or SoFi Invest. You are buying into a company that has historically burned cash at an alarming rate. The expectation is that these new partnerships will bring in immediate revenue. The reality is that industrial cycles are slow. A partnership with Brinks is amazing, but how long until it translates into net income? Does SMX have the cash runway to survive until those checks clear? The company has had to rely on heavy dilution to keep the lights on. Every time they issue shares to raise money, the pie gets sliced thinner. The fear, and the reality you must weigh, is that they might use this massive price spike to execute a capital raise. If they sell stock at $20 to raise $50 million, it strengthens the balance sheet but crushes the momentum in the short term. Let's look at the market mechanics of today's move. The volume was explosive. We are seeing a rotation of the shareholder base. The tired, beaten-down longs who have been holding for months likely sold into this rally to get their money back. Who bought their shares? A mix of momentum algorithms, day traders, and potentially institutional desks that can't no longer ignore the news flow. When a stock goes up nearly 200% in a day, it forces short sellers to cover. This is a classic short squeeze dynamic. SMX has had a high short interest relative to its float, because many traders were betting on it going to zero. Today, those traders faced a margin call nightmare. They were forced to buy back shares at any price to exit their losing positions, which threw gasoline on the fire. If you are using Interactive Brokers trading tools, you can see the borrow fees spiking. This tells you that the battle for shares is getting desperate. We should also consider the broader scope beyond gold. The 6 strategic partnerships announcement wasn't just about precious metals. It covered natural rubber, textiles, and electronics. This is critical because it diversifies the risk. If the gold industry is slow to adopt, perhaps the tire industry moves faster. The EU's new deforestation regulations require tire manufacturers to prove that their rubber didn't come from deforested land. How do you prove that? SMX says, mark the trees. If they can secure a foothold in the automotive supply chain, a sector desperate for compliance tools, the revenue potential expands significantly. This platform approach is what makes the stock more than just a gold play. It is a truth play. But let's get back to the skepticism, because a healthy dose of it is required here. We have seen companies claim to have game-changing supply chain tech before failing at the implementation stage. The logistical nightmare of installing markers and readers at thousands of mines, refineries, and factories is immense. The expectation is that the world will just adopt this because it's better. The reality is that supply chains are resistant to change. Refineries don't want to slow down their lines to add a marker. Miners don't want to pay extra fees. SMX has to prove that the value of the marked product is higher than the cost of the marking. They are arguing that verified gold will trade at a premium to unverified gold. If that economic theory holds, then the market forces will drive adoption. If not, they are trying to push a rock up a hill. This brings me to a question for you, the viewer. We are talking about the potential bifurcation of the gold market. One price for clean gold and a lower price for dirty gold. Do you think the global market will actually pay a premium for ethically sourced, verified gold, or is gold just gold at the end of the day? Comment below with premium if you think SMX changes the pricing model, or commodity if you think the market won't care. Let's dig deeper into the institutional side of things. Until recently, institutional ownership in SMX